We're going to bring Larry Shover, Chief Investment Officer at SFG Alternatives, in on the conversation. Larry, thanks so much for your time today. Let's just quickly focus on US markets because it was an interesting day, and certainly the mood has turned a lot more cautious over the last 72 hours. What's behind this?
You know, it's becoming a lot less macro-focused and more micro-focused. I mean, consider the fact that there's nothing new under the sun. I mean, GDP forecasts are being revised downward. Our earnings season is beginning with a thud. Europe is the same, and China, everybody's scared about a slowdown. But these are things that have been factored into the market for a very, very long time. But I think all of a sudden, the boat is starting to take on water. We're listing the port a little bit, and the market's selling off, thinking like this is just too much information right now. Nothing good is coming out, and so no one knows what to do, but we are listing a little bit.
It's George Lucas here. I was just wondering how much of this sell-off is just a technical correction based on that the US market has had such a strong rally for such a long time?
Yeah, I love that question. I think a lot of it is that, and especially if you're a technician, most people are looking at 1425 in the S&Ps, and we held above that today, and that's meaningful. So I think it might be a healthy correction. But with that said, if you take Apple and the home builders and the banks out of the market today, the market would have been down probably twice as much as it is today. But all that to say, yeah, it's been a very, very healthy correction. Not very crazy today, actually very lackluster, to be honest with you.
We've seen a lot of earnings downgrades in the lead up to this third quarter earnings season, and expectations haven't been particularly high. But we are seeing these massive falls now.
Yeah, you know, Julia, that's really a good question, or a good point, actually, because we've been walking down our earnings estimates for weeks and weeks and weeks, and so it's not anything new right now. I think what happens is that the Fed, you know, with the stimulus package, has just produced this tailwind that when you look at the alternatives, I mean, a 14 times PE ratio, a 7% nominal yield on equity is far better than the alternative, whether it be U.S. Treasuries, whether it be cash, REITs, MLPs. So I think that's been the tailwind. And again, I'm always wrong about the fact that we just cannot underestimate the tailwind of central banks.
And so we do have a lot of risk events obviously coming up. We've got the US election in 27 days, and we've also got the VP debate on Thursday. What are you watching out for? What are you expecting from the market?
You know, I think we're going to be in just a short-term consolidation phase, and we kind of saw the beginning of that today. I mean, the markets are never unaware, but I think we're in the beginning stages of a transition where people are going to come to terms with the fact that, hey, the OMT in Europe for Spain probably won't get activated until January. I mean, that's not a good thing. All the unknowns in Greece, China, we don't know, the election, the fiscal cliff. I mean, some people are talking about the fact that it might take a clip of 2% of GDP. I mean, that's a tremendous game changer if that happens. But until we know what's going on, I think we're going to see just a mild consolidation in the market, something that's very healthy for all of us. And we'll see what happens from here on out.
So where can investors find the most value, I guess, at the moment?
Well, I think right now the best values would be in commodities, and that's something Australians know a lot about. And you see how much commodities in general have fallen off the cliff, especially with the softs or even the metals like copper and aluminum. So I wouldn't underestimate what's going to happen in China. We do know there's a slowdown, but I disagree with what you said earlier about Australian dollar. I don't think there's going to be a correction. I mean, I think there's going to be a massive stimulation in China, and aluminum, that's where I'd put my money. It's something like Alcoa down 5% today. That's an $8.50 stock now in U.S. terms. Probably a really good buy.
Yeah, because they are saying that they're seeing a much improved outlook for the price of aluminium and demand.
Yeah, no, and getting back to the Australian dollar, as we were talking about, when the Australian dollar versus the U.S. cross was trading at 106, people were talking about it was overpriced and Australian dollar should be trading around 90. I just don't see that in the cards right now, and volatility is definitely not pointing towards that. If the truth were known, Australia will probably end up being the safe haven compared to the U.S., given your house is in order a lot better compared to the U.S.
It's a wait and see. Thank you so much, Larry Shover. And that was, of course, Larry Shover, Chief Investment Officer at SFG Alternatives.